So they said, hey, I need your fee to be at this percentage of the rent collected, and this is what I can afford to pay you in a leasing fee. And they said, okay, we'll take that. So he was like, hey everyone, what's going on? Welcome to another episode of The Remote Investor. I'm Michael Albom, and today I'm joined by my co-hosts,
Tom Schneider
and Pierre Carrillo.
And today we're going to be walking you through exactly what the step-by-step guide should be to interviewing and screening property management partners. So let's get into it. All right, guys. So let's just jump straight into it here. So anybody, well, not anybody, but a lot of people who are investing remotely are leveraging property managers. And property managers, kind of like real estate agents, are a dime a dozen in most markets. So I'm curious to get your thoughts and to have you share with everybody, what things are you looking for when you're screening and interviewing a property manager? Tom, you want to kick us off?
Yeah, I'll start us off. I mean, I'll start by saying, selection is important. And what I mean by that is talking to multiple. So I think in starting the conversation, I like the idea of kind of maybe sourcing like potential candidates and then going through a standardized process of like reviewing them based on a bunch of criteria. So I'll go ahead and riff a little bit on this and thinking about it as like 3 steps, right? Sourcing, identifying different ones, and then interviewing and kind of like running them all through a process of picking the best one. A gauntlet. That's right. Onboarding. So I'm going to start with just the idea of like sourcing and where to find. So I think there's a couple of different flavors. There are larger brands out there that manage properties in multiple different markets. And we'll talk a little about the pros and cons of that, but just like searching and sourcing. So you can say, hey, real estate property manager XYZ on Google is a way for that to come up. And I think the idea is it should be, if you're in a reasonably sized market, like you should be able to find at least like 10 different potential property managers to select from and to kind of go through this like rubric of evaluation. But what I like to do, I'll search through Google. I'll perhaps even like look on a site like Yelp. Bigger Pockets also has like a lot of people trying to sell you something. So like, their resources are great, but a good kind of starting place to build that list. So I'll go ahead and lead the conversation with that. Like first sourcing, identifying a bunch of them to run through this process. Michael, Pierre, any other kind of like thoughts around identification?
I think that's a great place to start. Something that I like doing is also like joining a local group, like a Facebook group of investors in that market, and then asking for references, like asking, hey, who's using property managers in this market? Who would you all recommend? And then combining those 2 lists from my own research that I'm finding online, and then what people are saying locally in the market.
Love references.
Pierre, what about you? What did you do when you bought your property?
So made the mistake of just kind of going with the most convenient property manager when we first bought it, and they were awful.
It's so easy of the path of least resistance of like,
right.
They say they do what I need them to do. Great. I'm not going to spend extra time. It's like, especially the PM, like that is just such a long tail relationship where you don't want to like cut corners.
And it could be super costly. I mean, it ended up being costly for us because they didn't even let us know that the tenants were out. And then we had this extended vacancy because we didn't even know our property was vacant.
Yeah.
And so one of the things was just like how quickly people respond is a good indicator.
It's so funny. That's probably a whole nother episode on horror stories with property managers. I had the same situation where a property manager just told me how they wanted to treat the vacancy. And I'm like, what are you talking about? Like, there's like a lot of time on the lease. Like, they're like, oh yeah, no, they've moved out. And it's like, what? Like, I get it.
Oh,
stuff
by the way,
I get it. Stuff happens and it's like out of your control. But anyways, I think this is like a future episode, like digging into those kind of horror stories. So thinking about different variables that I think about when, okay, I've sourced a bunch of them from either my agent or maybe a lender or online reviews, forums, all that good stuff. A couple of like really important questions that you need to know and have kind of like written down is how many properties do they have under management, right? Like how big is their portfolio? Does their footprint match up to like where I am investing? How are they getting paid? And that seems like a very basic question, but it actually varies quite a bit from property manager to property managers. Some take a percentage of rent, some take a flat rate, Some take a percentage of capex, or construction. So, not equal.
And those little differences can change the incentives of that relationship too. So
yeah, it's
really
perverse. It totally. So I'm going to leave a little bit of a leg room for Michael and Pierre to kind of add on. But those are some initial sort of numbers, within a spreadsheet. Each row is represented by a property manager that I'm evaluating. Columns being, their pay structure, how much inventory they manage, if they're investing and managing their own inventory as well. And then sort of a check the box on what zips, as well as property characteristics they manage. Are they a class A type or a class B? What properties am I investing in? Does that match up? I'll leave a big pregnant pause to, not take all the,
No, this is so great. Tom, you said something and you glossed over it that I want to come back to. And it's when we were talking about references before about where to find some of these property managers, agents can be a great resource for that too. So if there's somebody listening to this that is actively buying in a market and so is working with an agent or wants to find an agent and then will also need a property manager, those two can often play off each other and will often have good working relationships. Sometimes an agent will have a property management business or vice versa. So definitely chat with your agent or property manager about looking for one or the other. And then something else you said, Tom, is that asking them how many units they have under management, I think is a great question. So one thing that I talk a lot about in my education content at MyFi Academy is not only what the questions we should be asking are, but what then the answers we're being told tell us about that person or that company. And so I think I want to dive into this a little bit more because I love the questions that you pose, but I want everyone to come away from this episode with, okay, well, I go ask the question and now I get an answer. And now what do I do? Is that a good answer or a bad answer? So curious what you guys think. Someone says to you, hey, I've got 1,000 units under management. What does that mean? How does that information help us make a decision?
I think it's all contextual on where they're managing. I think 1,000 is a decent is quite a bit. Especially in a smaller perhaps tertiary, even a major market. I think that's pretty significant scale as a property manager. With that, I'm kind of curious also how many property managers they have as a ratio to managing. But I mean, I think that's really specific. So if I'm in managing in North Pole, Alaska, that would be crazy to have somebody have 1,000 properties under management or whatever, city in Alaska. I think. Kamchatka. So I think it's very, Michael, it's very kind of dependent on where they're managing. But if they're managing in Atlanta and they're only managing 20 or 40 homes, that's a little bit of a red flag to me, being in such a big market. So, kind of rule of thumb, I don't know. I typically only invest in places that have 1 million, population in the greater metro. And if a property manager is managing less than 100 or maybe even less than 200 homes, I'm that's kind of lean. I don't want them to learn the craft of property management on my dime. I think you're kind of going to where you're alluding at is how long have they been in business?
Yep. Yeah, I love it. I think you nailed it, and I think that it's so important to understand that real estate investing is so hyper local and so market specific, and so it's really tough to take umbrella approach and apply it uniformly across the board. So I agree totally. I think it all depends on the market size. Do you think that bigger is better or smaller is better, or the age old question, does size matter? How do you feel about that when it comes to your property management partners?
It's a good question. I mean, I think there's too small, and I don't think there's too big. As long as the other sort of criteria is good, and that their collections is pretty good. Oh, their average turn is pretty reasonable. Oh, the customer and residents seem pretty happy with the services that they, with a grain of salt, because that relationship can be a little bit tenuous at times. A manager and a resident. But I mean, there are major red flags. I digress a little bit. So anyways, I'd say there is a floor, Michael, but not really a ceiling of if they manage a ton of homes, great. They've got an efficient business. I want to be a part of that,
Totally. Pierre, I'm curious to get your thoughts because I know that the property manager that you ended up going with did have a really significant footprint and was really
They were
large. So
huge, and yeah, so they're a huge tech-enabled company, and that's like kind of one of the red flags that I see is like if they're a tech-heavy property management firm, it's kind of like one of these property management light services that they're using technology to solve their problems.
They use
I'd say
AI
that's
and Bitcoin.
like
Synergy.
I'm all about like making your systems robust and tech heavy and using all of the latest technology. But if you're replacing people with technology in property management, I'd say that's a real problem. Getting someone out, like one of the big problems we had with that first company was getting someone to get out to the property. And it was just week after week, no one would give us any new photos. And that's how we ended up with an empty property and not even knowing about it. And the property manager that we ended up going with was much, much smaller. But they were out there right away. They sent us photos of our property the day we got in contact with them. They weren't bragging about being the most sophisticated technology-driven company, but they were people who did their job right and responded in a timely manner. So,
yeah, it's interesting. So like we obviously can't take one-off experiences and apply them across the board, and to say that every large tech-enabled property management company is gonna operate poor for you. Conversely, every small mom and pop operator might not be a great fit. So this is why I love that we're having this conversation, is just to give people some ammo and some takeaways to then go investigate for themselves.
right.
Because it's funny. Go ahead, Tom.
I think there's sometimes this like inverse relationship of efficiency and resiliency, where if you build something so efficient, like if things go off the rails a little bit, like it can kind of hit a standstill. Like Pierre, like there's probably a non-standard thing, I don't know, maybe non-standard, whatever, but you can very easily throw the baby out with the bathwater of trying to look, we have one employee for every 10,000 homes. It's like, oh, that's great, like, but you're in a business that is as kind of dynamic and like kind of a moving target as like managing real estate, managing tangible property. Like you need to have some resiliency and some, not over efficiency.
Yeah, and when I say red flag, I'm not saying stop sign. I'm saying just notice for inquiry here. Make sure that they're not replacing the things that should be done by a human with some app or automated response.
That's great. That's great. Tom, you touched on this point a little bit ago, and we're talking about property managers per property kind of on a ratio basis. And so if someone is new to the investment real estate space, they might be a little bit confused by that, because I'm talking to the property manager. What do you mean there's like a different one? So maybe you could go elaborate a little bit on what that means and what that looks like across some different companies.
I think it's, so I, work in like real estate, and like as like a team that is like managing property, like you want to have a fairly high ratio of like employees to number of units that you manage, like 1 to 100 or 1 to whatever. I whatever that number be. I think probably as an outside investor, it's a little bit less important to like have that as a ratio. So like as long as they're responsive, able to take care of the home, able to provide a safe, habitable, all that good stuff, with the resident, and lease the home with good people, I think that's probably like less important, like what that ratio is. I think sometimes like, for better or worse, kind of I like apply a little bit of a lens of like just institutional experience of like, oh, if our systems and technology is running well, like, we have a good ratio. Obviously not the awful ratio that results in like no flexibility and not being able to handle like stuff outside the lines. But, I think that's probably less important, but still like an interesting data point, at least for me, having seen
Totally.
Yeah.
Totally. And I think it's something that, because I know your background and because we have history, I know that you asked the question and had experience with the person that you were speaking to on the phone as you were interviewing this property manager wasn't the same person that you were going to be dealing with on a day-to-day basis. So how do you screen for that type of thing? And is that important?
You gave a good example on how to do this, because so like a lot of companies, like they've got a salesperson, a salesman or woman that's gonna sweet talk you, and I think
we've got that. We can do that. No problem.
Yeah. I mean, something that I think you taught is around this sort of like secret shopper. Like find one of their listings, like kind of go through the process, and like that's going to give you a much better insight on they're as like an operation doing that, not coming in as a potential customer, as someone who's having them manage, but as on the other side as like as a tenant.
Totally. No, yeah, I love that. And what Tom is referring to is basically if you're interviewing property managers, screening property managers, just go on their website, find one of their listings, and call the phone number as a prospective tenant, and see what that process is like as a prospective tenant. If they are great to work with, if they take really good care of you, if they're responsive, that's a great sign. Versus if they're giving you the dog and pony show as an owner, and they can do everything and they answer all the right questions, but you have no idea how they're treating your prospective clients who are your tenants, that could spell trouble down the road. So I always like to see how the tenant is treated. It's funny, I posted about this a while back on Twitter, and someone was like, you're starting the relationship off with a lie under false pretenses. And I'm like, no, man, I'm trying to understand what the customer experience is like for the clients who they're serving.
Yeah.
And I'm like, get out of here. I don't need that. I think they might have been a property manager too.
I think another way I like to kind of get under the hood, and again, would probably be the like more extreme heavy like interviewing process of a property manager. And I think there's a spectrum of level of diligence, and I think it's a good exercise to apply more diligence into this process. But another question you can ask is a more kind of like open-ended question, like, hey, what's your process of managing a renewal or managing a turn? And a property manager who's like on their game is going to be like, all right, well, first we look up at local comps at what the rental amount is going to be. Then we review with the owner what they want to do with the actual resident that's living there. Then we approach the resident with XYZ and present this to them. And, it's not to say that every single property manager has the same process, but it's like they can like succinctly like tell you or share with you what their process is. And like they have a plan, And I think also like in going through those questions, like you're just going to get like naturally more kind of educated. Like you don't have to know exactly what the right or wrong answer is, but it's almost like you throw a question out there like that, like, hey, what's your renewal process? What's your turn process? And just like turn on your BS meter and turn on your like learning, ears and hear what two different companies say. Like I think there's very little to lose of coming in with a beginner's mindset, no matter where you are in your investor journey, and asking these really important questions, like the process of a turn or an initial lease, or how you deal with someone who's late a couple times or whatever.
Yeah, no, I think that's great, and I love the open-ended style questions, guys. I'm curious to get your thoughts, and it's something I've heard through the folks that I've worked with in the past is, I'm too new an investor. I'm nervous to call these property management companies. They're not going to take me seriously. Why would anybody talk to me? I'm not a client of theirs yet. What do you have to say to that?
Stop being a little bitch.
Yeah.
I don't know.
Get your ego out of the way. It's just such like a no-brainer of like it's okay to be a little bit vulnerable, and like and it, like ultimately like every single cycle of going through like asking these kinds of questions, like you're going to learn more, you're going to get a little bit like less concerned about asking these questions, and like ultimately like who cares how much looking like not smart, like they're trying to sell to you, like they're trying to get you the business. And I think there's like very little risk in going about it in a very I don't know what the right word is.
If you go with them, you're going to be paying them good money. I mean, you just got to get the information however you can, and that's the best way.
Yeah. And I think too, on top of that, if you call and if a property manager makes you feel silly for asking these seemingly maybe trivial questions, then that's maybe
right,
not someone you want to work with anyhow.
Yeah.
Like someone on the other end of the phone should be willing to help educate you and hold your hand and walk you through what the process is like, if they truly understand the business and if they want new business. If they're not interested in growing, you've heard of contractors throwing FU quotes. It's a ridiculous price for something. So like they don't want the business anyhow. So we see that in the property management world too. And that should be assigned to you as what that relationship might look like going forward.
I'm going to flip a question.
More often than not, so on that same topic real quick, more often than not, these property managers, you can't get them to shut up about their business. And you call them and they're like, oh, we do this and we do that. And we're going like, it's like, dude, I had a 30-minute call with you. We're going 45 minutes. Like, dude, and just like, let me off. You're good. I know. Like
it could be some regional cultural stuff, like a very long call. How y'all doing?
For sure.
I've never, of all the property managers that we've called, like, never are they like, why are you calling me? It's just
Dummy, we won't take your money.
Yeah.
Michael, I got a question for you. You've been throwing off these. I'd love to hear from yourself as well, Pierre. What are some red flags? So, we go through a process, we identify a bunch of people, we're asking them, discrete kind of quantitative questions as well as some qualitative questions, getting some processes that they have. What are some red flags?
I think Pierre touched on it at the beginning here, and that's timeliness and responsiveness. So if I ask a question and I don't hear back from them for a week or 2 weeks or at all, major red flag. And Tom, you brought up the point too, which I want to touch on, the cultural differences in a lot of other parts of the country too. Like, we are a massive country with a diverse cultural background and customs and norms. And so here in California, Silicon Valley, I mean, if someone doesn't get back to you by the end of the day to an email, you're kind of like, what's going on? In a lot of other parts of the country, 2 days, 3 days, 4 days might be the cultural norm in terms of that's being really responsive. So I think it's important to set expectations too around just asking the question of having the conversation of, hey, if I email you, how soon can I expect to hear back from you? Is really important. But for that initial call, for that initial interaction, if I'm emailing you, especially if I'm a brand new lead for you, I expect to hear back. And if I don't, that's a major red flag. And it's funny, I interviewed a bunch of property managers, or tried to interview a bunch of different property managers in a couple of the markets I operate in. And the ones I work with today are the only ones that called me back. And I'm like, we make the joke about contractors. If you pick up your phone, you'll get business. Like, if you call people back, you'll get business. So I think communication is huge for me in terms of red flags. What about you, Pierre?
that was the main one for us, is we couldn't get eyes on our property, and to have someone that was like one of the biggest selling points. We interviewed, I think, 3 or 4 when we were trying to fire the previous one, and the one we ended up going with was the person who was quick to respond, quick to go to the property, quick to send us photos, give us, like, they just provided all, and they're like, this person's on it, they know what they're doing, they're local, they definitely live there, we're going with them. And they were the same price as the first awful company.
Yeah. I think another red flag. Oh, go ahead.
And that reminds me of, this did not happen to me, but I've heard Tom tell the story before, and maybe I'll prompt it for you, Tom. But the hidden clause inside of the property management contract.
Oh, yeah, that's a good one. So on to stage 3, sourcing, then looking at, specific questions, and then having a request of things to review. And one of those being like their property management agreement. So I've had to fire property management before, kind of similar things where it's like, I feel like the property was in a satellite region, which wasn't their main region. So they didn't have like a great team there managing. Anyways, when I fired them, they like in the property management agreement, which I did not read, which now I do all the time. Whenever I add a new property manager, is like, they were like collecting a bunch of money in firing them, like within the PM agreement. I don't remember like the specific details about it, but it was like taking an extra month rent that they just like took.
There's a cancellation clause.
A cancellation clause after it was within a certain number of years. And, I think like on the onset, like if I had read the property management agreement before signing it and said like, hey, I'm not signing it. If you include that, take it out. Like I probably would have saved myself $1,000 or $2,000 on some like crazy, cancellation clause. So, another, to that point, like red flag is it might take a little bit of time and just skimming and reading through that property management agreement. But that's a good use of time. Like it would have saved me $1,000, $2,000 in going through that.
And it would have taken you 2 hours, 3 hours to read it. So that's like some lawyer money right there. That's pretty good ROI.
That's great. Yeah. Great ROI. Yeah.
I think also too, like I think it's so important to read the stuff that they send you. It's legal, it's binding. You need to be aware of what you're signing. The other thing that I always look out for, and it's kind of a personal preference and pet peeve of mine, but when I ask the property manager, how do they get paid? How do they make money? and they start listing off all these things. And well, we charge $50 for an inspection, and this $25 to return email, and $20 to answer the phone. I'm like, I hate getting nickel and dimed for all these different line item charges. And I, from a property manager's perspective, I get it, because it takes time to do these things. And so they need to make money, and they need to charge for their services and the time they spend doing things. But me personally, I want a flat fee. I want a flat percentage of the rent that they collect is how much is how I pay them. And I think it's also important to set expectations out there for everybody who isn't maybe familiar with property managers and how they charge. There's a couple different models. One is, Tom, like you mentioned, a flat fixed rate. They charge $50 per door, whatever, independent of the rent. Some property managers will charge a percentage of the rent, and some will have, and that includes everything. And then some might have this kind of a la carte menu style of services and costs. I'm a big fan of kind of that middle tier of the percentage of the rent. However much you collect, however much you're able to charge, that's how much you get paid on a percentage basis. Because I think that aligns incentives in really well, in that if they're able to collect more rent, they win too. They get to share in the upside. So I just wanted to put that out there for everybody listening, that it's just a personal preference. You'll figure out what works well for you. What do you guys like? Which style works well for you guys' portfolio?
Percentage of the rent, I feel like makes the most sense, but it depends. Yeah, it depends on if you're going with one of the lighter services out there. There are like some of these tech platforms that offer you per door, which can come out to a bit less than.
Yeah. I do the math, and a lot of stuff we're saying, market kind of specific. So, I have a few units up in the Northeast in Pennsylvania, and there's not as many property managers as there are in other like big markets. And, they have this like tech fee, like $1 a month or something. And I cringe so much when I see it, but it's like, they're good. They have a good relationship. They collect rent. They keep the house in good shape. They're like on responses and stuff. So I think on that, like, format of getting paid, it's, do the math. Like, if it's a per dollar per door or percentage of rent, like along with when you're doing your underwriting and making assumptions about repairs and maintenance, like how much would that work out to be in property management if they're charging an upcharge or a daily amount or whatever, so I think it's worth within your actual model itself, applying the different property managers, things, however they're collecting money.
Yep. Mike, have you seen property management fees go up over the last 4 years at all? Have you recognized any changes in your portfolio, or is it stayed pretty static?
Good question, Pierre.
It's a really good question. It stayed static, but so the percentage as a number has stayed static, but the rent has, of course, increased over the last 4 years. Now, what I have seen increase are labor and material costs. So the repair costs are more expensive. Those projects are more expensive, but the property managers, no, which is, I think, kind of the beauty of real estate investing in general, is that it's a great hedge against inflation, because as the rent goes, as your expenses go up with inflation, your dollars you're bringing in also go up over time. So, and the property manager gets to participate in that upside.
Final two little recommendations on property manager. So one of them is, I'm sure I'll talk about this again in a future episode, but like bringing them into your acquisition process. So like kind of like bonus questions, which is honestly like my favorite thing to do, like in evaluating a property manager, and say, hey, I'm looking at buying 123 Main Street. Like, what do you think? And like, you can almost leave it kind of open-ended and see how detailed they come back. Like, I've had a wonderful experience. It was that property manager that in Pittsburgh, they're like, oh, this house is really great. There's a lot of 3 bedrooms. This one's a 4 bedrooms. We'd lease it right away. I think we'd get this kind of rent amount. And like, man, that's thoughtful. That's knowing the market. And there's like such a double whammy win with that, and that you're kind of like demasking that property manager about how well they know the market and how is conscientious the right word? Or thoughtful they are in the way and thinking about real estate. But you're also adding them on your acquisition team. Like, that's fantastic, and there's been other folks that says like, we don't really manage a lot of properties in that area, XYZ. So that's one pro tip. The other one is get a reference. Like, that's like an awkward call or communication, but like such a high ROI. So say, hey, do you have any like customers you use that like I can talk to? And like actually just like emailing people and say, hey, I'm thinking about using ABC Property Manager, and they said, you know, to get your feedback, like, what do you think about them? What do they do well? What could they improve upon? Blah, blah, blah. And a really good use of time, you know, as sort of like a little bit of an introvert. It's can take
that's a much more robust data point than their online rating, because property managers get rated by the people who have to deal with them on the day-to-day basis, the tenants, and tenants hate property managers.
Totally.
Yep. I think that's a great point. My last pro tip that I'll leave everybody with is everything is negotiable. So I've heard from students I've coached with in the past that they're like, oh, you know, I found this great property manager, but I ran their fees through my model and it doesn't work. I'm not hitting my cash flow targets. And I said, okay, ask them to lower their fee. See what they say. And like, you can do that? I'm like, yeah, everything's negotiable. So they're like, okay. So they said, hey, I need your fee to be at this percentage of the rent collected, and this is what I can afford to pay you in a leasing fee. And they said, okay, we'll take that. So he was like, I got to have my cake and eat it too. So I would encourage everyone not to be shy about asking for the things that work for you. By that same token, you can't get mad at somebody for saying no. So their fees are their fees, and everybody's got to make money. But I would encourage everyone to ask the question, because all too often people say, oh, the numbers don't work for me, I got to move on. When in reality, there are things that we have within our control or questions that we can ask to help make the situation better. Sweet. Well, thanks so much for hanging out with us, everybody. Really appreciate it. We look forward to seeing you on the next one. Happy investing.